So when you're actively Betfair trading on horse racing, pre-off we're talking about, because obviously that's my speciality. When you turn up to a market, you're looking for certain things. You're trying to establish if there's some sort of safe place within the market where there's some element that you can read, that you can sort of see what's likely to happen next. If you go into that market and you can't see anything, you may be able to spot something that could potentially occur at some point in the future. And your role as a trader will be to anticipate that that will happen. So when I go into a market, I'm sort of scoring it. I'm sort of saying, well, this is the type of race I'm looking at. This is what I can see within the market. These are where the odds are at the moment. This would be a good trade. And then I would basically either trade it if I can see that opportunity, or I sort of sit and wait for that opportunity to present itself to me, because all I'm trying to do is to get ahead of the market movement, even if it's just by seconds. That's enough to be able to make some money. We're just trying to anticipate a little bit of price movement, or sometimes no price movement at all. It doesn't matter. We can trade a whole variety of different ways. But basically, by looking at the market and assessing it and scoring it, we can decide exactly what to do. So you would sort of say, oh, yeah, recognize this market. This is the type of market. I know what's going to happen here. Wait, I think I know what's going to happen here. You would look at nice entry points. You would adjust your stake according to the liquidity that you can see. These are all little things that you should be doing in order to be successful. And you basically have in your head a scorecard of things that you're looking for that would make it a great trade. The perfect trade would be a number of things that would all line up perfectly. And, that would include a number of different facets, such as on-course activity, the price activity on the favourite, what's happening within the rest of the market, a low risk entry point within the market, somewhere within that particular traded range, and so on. So what I've done in these videos is I've actually produced an assessment of a market, and then we see what happens. And then the next market I trade, but because we're limited a little bit by what the market offers, you can see the way that I change my style in that market. And fundamentally speaking, this is the way that I approach all markets. I know from a lot of experience roughly how they're likely to trade. When I turn up, I'm looking for the key points within the market where I think there's an opportunity to do a low risk trade. And remember that trading is all about taking a risk, not avoiding it. This is one aspect that people tend to get wrong with trading. People are trying to find the perfect trade. And I can tell you now that that does not exist. Every trade that you do carries risk. It carries an opportunity that something could go wrong. So this is why understanding about taking losses and realizing that your position has gone wrong is a key element of trading, because you go into the market with an idea of what it should do. And if you don't see that, there's a simple thing that you can do to minimize your losses. And that is, don't trade it. If you can't see anything, don't trade it. But you are looking for clues across the market as to where an opportunity for a trade could occur. If it doesn't work out, you just get out of your position at the best available price. But what you're essentially trying to do is to find an opportunity within the market that's moderately safe, where you've got a good clue as to what could likely happen next. And then you're taking a position in that market and managing your position effectively when you've done that. And that's essentially what I'm going to show you in the next few videos. So if we look at this market at Cheltenham that we've got today, when I arrive at a market, there are a number of things that I'm looking at. So I'm sort of saying, well, what type of race is it? So this is a handicap hurdle, and you can see we've got a slightly shorter priced favourite. So, that's sort of interesting. Basically, the market is making a decision that this favourite is underrated, and therefore it's at a shorter price than the rest of the field. And you can see that there are bigger prices than the rest. Second favourite is at 4s. But primarily when I sort of set myself up to market, I'm really interested. Most people think that there's some sort of, magic that you're performing. But what you're trying to do is you're trying to line up a series of questions to tick a few boxes. So you would sort of say, how long have we got left? Because that will determine how long you've got to get out and how big the trade would be. So if we put a trade in now, we've got 9 minutes for it to mature. That's a long period of time. But if you've only got a minute or two, you would have a much shorter period of time to do something with the trade. So you would trade at much smaller increments. So basically, maybe we would lay at 3 and we'd get out a few ticks higher if we had a minute left. But if we've got a long period of time and we're going to enter the market at this particular moment in time, it could move a fair bit. So you would put closing trades much further away. Basically, the further you are out, the wider the traded range will be, and the closer you get to the off, the narrower the traded range will be. But also I'm asking questions of what I can see within the market. So we can see this is traded at a high of 325 and a low of 274. And we can see the second favourite here is at 4.3 and traded at a low of 355. And you can see that this is traded in a very, very narrow range here. So ask yourself sort of basic questions such as, is there something happening that will give you an indication as to where the price will go? So for that, you would look at on-course activity, whether you're picking up on any particular activity on one runner within this particular market. But you can see this market is reasonably stable at this moment in time. But also, give yourself a theoretical question. If we lay at 3 here, which is a crossover point, this would be quite nice, but we're laying sort of towards the top end of its current range. So really what you'd be saying there is if we were going to lay at 3, we'd expect the price to go up and it would break new ground effectively within this market. For that to be happening, you'd want to see support on some of these runners. So if you wanted to lay at 3, you'd expect the price to sort of head up, and you'd want to see something backed in somewhere else. So you can sort of say, am I seeing something backed somewhere else? Therefore, is this lending pressure on the favourite? And is the price therefore going to go up? If we were going to lay at a crossover point, it would be ideal if we could lay somewhere near the bottom of the range. But you can see we're some way from that, because being at the bottom of the range, especially in a handicap, as it came down to hit a new price, if it didn't break that price, you'd probably see the money begin to run out and the momentum decline at this point, in which case you're going to much more likely to see a bit of a bounce. So laying at a crossover point would be great, but we'd want to see it towards the bottom end of the current range. Now, because most of the money's been traded around here, we'll have to wait for more money to come in to make a decision as to whether we think this is being backed or laid or whatever. But being in a handicap, you tend to find that the top and the bottom of the market are a little bit stronger. In other words, people aren't willing to go too far outside of those prices, simply based upon the fact that it's a handicap race. If the price drifts, people may think that there's some value in backing it. And if the price comes in, people may think there's some value in laying it. But also, because of the interaction of activity throughout the rest of the market, the prices will begin to sort of self-correct. They'll revert to mean somewhat. So the race type that we're looking at here tends to lend itself to that, but because of the shorter price of the favourite, there's a bit of opinion there that may set off a bit of a move. But also remember that we don't have to trade the favourite, we could trade the second favourite. So if we're uncertain or don't see a setup that we like on the favourite, we could actually move to the second favourite and try and do a trade there. So if we started to see back money coming in on this particular runner, then maybe we could lay the second favourite on the basis that it's going to drift at some point. Again, we're at a crossover point here. We'd prefer the crossover point to be near the bottom end of the trading range and then see backing on the favourite. That would be a tick in our box, and then sort of that would allow us to send the price out. But when you go into a market, these are the sort of questions you're asking yourself. Do you understand what's going on? What opportunities can you see? Are there key points within the market that look like a good opportunity? You're just trying to stack those things slightly in your favour. You're not going into the market blind. You're trying to construct a case for something. Now, in this particular market, the problem that we have here is there is no, really clear. If we go to some of these other runners at bigger prices here, maybe there's an opportunity there, but 90% of the money is going to be on the favourite and second favourite. So we really need to find a defining entry point within this market. And it could be that as the price begins to come in, as we get closer to the post, that presents the opportunity for us to oppose a price, or we see it cross a critical point within the market. But if we tried to trade this market at this moment in time, we've got a couple of positives in things that we can understand that we could use to get a potentially decent trade. But we don't really have enough here to be able to make a really good trade. So as a consequence, whether you choose to participate on this or not depends upon how confident you are. And my view on this particular market is I'm not confident that I can tell specifically where any bias on the favourite or second favourite is going to be. So I would have to enter the market at a later point and actually make a decision about how to trade it there. So I'm waiting for the market to present the opportunity to me. You're under no obligation to trade the market. However, you can wait for that opportunity and then jump in when you actually see it. So yeah, that's how I view the market at this moment in time. So we're now a lot nearer to post time. We're about 3 minutes out, and you can see there's been a lot more money traded in this market. Both these things should be on your tick list as well. But can you see that the way we discussed the market a few minutes ago has come to transpire? There's been some backing activity within this particular market. It's pushed the price below 3, and that is sending the price on the second favourite out. So when you're assessing a market, what you're looking for are clues as to scenarios that you think could happen. We didn't want to lay the favourite because it was near the top end of the current traded range. We could have backed it, but we know that because there was so much money on the front too within this market, that if the price on the favourite came in, it would almost certainly send the price on the second favourite out. But you can also see that there's been backing activity on the fourth favourite here. So can you see how you construct a case here for laying the second favourite near the crossover point? You can see that when we were looking at the market earlier, we could rule in or out a number of things, but ultimately it guided us towards that second favourite in this particular trade, and then it's just a question of waiting for those scenarios to uncover. It's a very useful way of looking at the market. Go into it, make an assessment on what you should be doing, where you think is sensible to be within the market, and then wait for that situation to develop. So we're now looking at a race at Uttoxeter. It's the last race on the card. It's a bumper, and we've only got 3 minutes in which to actually trade this market. So we need to be a little bit careful, because basically if we make a mistake, we need to be able to get out. So we need to pitch our orders at a level that's sort of lower than the average amount that's being matched. The reason that we're saying that is basically I want to be able to get out. If I make a mistake, I want to be able to dump my position super fast. So if I staked £1,000, say, on the favourite, I just wouldn't be able to get out easily. So yeah, a slightly more cautious approach. We can see the second favourite's drifting. The favourite, don't know what that's doing. It's all over the place. But we can see that the third favourite here is near a crossover point. So that looks like an opportunity. So I'm going to pop a couple of orders in around this level. And you can see it started to move already. But I can't, you can see there's so little money here that I really can't put large amounts in here. I'm going to have to sort of stick to relatively small amounts. The reason that I'm laying at a crossover point here is because if we see a bit of support for the favourite, we'll see a bit of support for the second favourite, the price on the third will go out. I mean, you can see there's money coming for the fifth favourite here and the fourth favourite, and all we need is a bit of money for the favourite or second favourite, and this price will really start to fly out. So I'm going to establish a position of about £200, and as soon as I get matched on that, I'll start putting the closing orders in. Not much money at 7.6, so let's put a closing order in there. I'll try and put some more money in here. I'm basically expecting a slight drift. We don't have much time to catch this. And in fact, I need to change channels here to make sure I'm on the right channel so I can keep an eye on what's going on at the start. So we've got £75 filled. This isn't going to be a big trade. But can you see I'm just trying to be cautious here. I'm trying to keep things in control, basically. There's a little bit of resistance for it to go lower than 6.6. Somebody keeps laying at 6.6. You can see that on the volume here. They're going down at Uttoxeter. They haven't finished at Nace yet. So I'm keeping an eye on the start here. So there's lots, there's like a roadblock building up at 6.6. For some reason people are willing to trade at that price, but not much above or below it. We've had our order taken down here. So really I'd love to see a little bit of backing here on the second favourite or the favourite, or preferably both of them. That would be perfect really, to help push the price out. They're getting organised at the start. So we're stuck in this really tiny range here. There's not a great deal of movement that's going on within this market. Because we're so close to the start, I'm going to have to put the closing orders back in. I'll weight it towards the most recent price, because that's the one that's most likely to fill. You just see we've been matched on there, which is why I added a bit more at 6.6. Getting filled at 6.6. Add a couple more in there. And go on, get filled, get filled. Just cancel off these orders that we no longer need. They're looking very ready at the start, so I just want this order to get matched. Come on. Gonna get matched any second now. I need to be careful about not going in play here. And milling around at the start. They're going to do a turn, I imagine, and then come back to start. Come on, you've got to get matched now. It's ridiculous. I'll put it in there because there's so little money there. Any money gets taken will be mine. There we go. So yeah, you know, it's a tiny trade, but relatively safe. Saw a bit of backing on the favourite, a bit of backing elsewhere. You can see it's gone right off the bottom of the ladder on Bowen's Park. So, you know, it's not a huge amount of money, but I think that that was relatively low risk and not, you know, didn't have to do anything particularly special to get that. So anyhow, I hope that that's given you a bit of an indicator as to what I was looking for in that particular market and how I traded it.